The sudden slump in subscriber growth of Disney Plus is bigger news than it's being reported as, and with the theme parks not up to speed with the previous earnings and the other segments still underperforming, or actually just completely unavailable, I would say that streaming was kind of the last option for revenue for Disney. And not actually profit, but revenue. And investors clearly hit the pause button on this news, at least that's what the stock price kind of indicated. It's got to be bigger than this. In fact, it is. So let's talk about it.
Ladies and gentlemen, hiss and foes, welcome to the Culture Casino.
They knew that this could be a problem. They knew it, and I knew it. They hoped for their other segments to actually be in a position to carry the load for when this did happen. They had a multi-year plan that was in place to expand Disney Plus around the globe. And they were pretty set on meeting the expectations of that plan. Of course, the world changed, and those plans had to change along with it. We, of course, had a global crisis, so Disney Plus rolled out in a whirlwind that was bigger and bigger and faster than they had ever imagined. And they were touting each successive milestone that came along as far and wide as they could. I mean, it was a winning strategy for the company, and going forward, they wanted to project the confidence that they had in their product. And it's a decent product. It's got quite a bit to offer, although there's some hiccups here and there's not the entire breadth of the catalog, but we'll get to that hopefully later in the video. Complete reliance at this point on the direct-to-consumer when everybody was kind of locked up at home seemed like, a more than winning strategy. Now, investors loved the push, and of course they loved the results. They were very excited that their forecasts were being exceeded by leaps and bounds, and Disney Plus went global as quickly as possible with new offerings on the horizon as part of that package, which included Hotstar amongst some other stuff that we don't get here in the United States. And because of this impressive pace, they didn't really get to amortize the way that they wanted to. They had an offset that was kind of set up to allow for that and a certain amount of churn, which you absolutely have to plan for in a subscription service. So a few quick words about churn for those that are unfamiliar. Churn is the number of customers that you shed from your service each and every month. Sometimes if it's a weekly service, every week. So churn can be affected by a lot of different circumstances, and usually from a loss of interest or need. That's the most often cited. In some cases, it's because of inspiring incentives. In other words, you offer somebody a special deal to sign up, and then, that special deal expires and it jumps up to the regular price. A lot of people are like, I'm not willing to pay the additional fee. And then there's the more rare but very, very impactful circumstance when churn comes because of bad actions that are perceived by the subscribers, right? So let's move on with the video from there with a brief explanation about churn. In Disney's case, the nearly 6 million subscriber shortfall in the projections is very bad indeed. Like I said, bigger news than is being reported. And I'm pointing this out again. Disney knew that this was coming. They even tried to protect themselves by stating that they were going to limit reporting of subscriber growth in the future unless they were hitting significant milestones. Now, investors kind of balked at that. And so here we are now with numbers being reported at a much slower rate than anticipated or projected or expected, which with Wall Street, you want to hit the expected numbers. Now, those numbers show some things that Disney knew was going to be true. Increased churn, with that churn being driven by pretty much everything. Customers losing interest at the dwindling number of offerings as the promised catalog of everything being available is still shielded from users by whatever Disney's curated collection of availability is at the moment. And customers, of course, are realizing that they don't watch nearly enough of the channel to pay for its price. And people are losing access to those third-party incentive offers or bundles that so they're not electing to continue with something they have to pay additionally for. And finally, there are people waking up to the political divisiveness and the preaching and all the other stuff that's been coming from Disney and their employees and their certain segments of their employees, et cetera, et cetera. So for many people, Disney has just walked away from America in favor of the international market, and particularly China. And in my assessment, I don't think that's wrong, but again, we're deviating from the business here, so let's redirect back into the very poor numbers that also reflect an even lower ARPU than what they were shooting for. This means that the revenue per user was down from last quarter, and despite a recent price hike in the service, which was an additional $1, they were actually expecting a higher ARPU, and so would I, except they don't, which means there's a lot of shenanigans behind the scenes in some of these offers and some of these deals that are being put together and some of these third-party incentives that exist. So, Anyway, in after-hours trading leading into today, when I last checked, Diz was off 2.6%. Updated this to right now, as the time of recording this video this morning. Right now it's sitting at $168.94, which is down $4.79. That's a pretty decent drop of 2.7% or more. And who's to know where this falls, because the mid-range outlook, according to analysts, is lower. What's interesting is Disney just pulled in $901 million in profit on a decline in revenue of $600 million. The profit came from, obviously, just massive budgetary cuts and expenses that would include some theme park additions and, and some pushback on some future expansion plans. And I guess maybe some other places that they just didn't quite reveal. Now, Disney has had many market analysts that have been talking about overvalue for a while. And of course, I agreed with that they were overvalued. Clearly, the market is agreeing right now, especially in the midterm. And it's continuing to fall as the day goes on and as I'm recording this video. So, maybe the analysts weren't wrong. And with so many units that are down right now and their cash cow, the theme parks, running kind of in a safe mode, which is kind of how that's probably the best way to describe it. There's not a lot of room for short-term recovery, or actually any place where you could say it was coming from. Disney was relying on Disney Plus, the streaming service, but that element actually may have matured at this point and will now only yield a small level or small amount of steady growth, which, again, kind of as expected, just sooner than expected. And they may yet reach profitability within the window that they established by the end of 2024. Who knows? But hey, from here on out, I think it's going to be a slow, steady march, and you're going to see why they really don't want to talk about subscriber growth within the company. In my opinion, Disney sees this as the tipping point, and at the very last moment, with permission from the mask police, they are pushing hard into their Florida parks return to greater capacity, if not full capacity, not just for the parks, but for the hotels, which, believe me, big source of revenue. And mind you, they are already well behind other parks in the region in Florida when it comes to loosening up some of the capacity restrictions and other confiscatory efforts that have been limiting, I guess, their profitability when it comes to that sector. Hopefully, that improves. If they can get the Florida parks back to capacity without too many inconveniences and get Disneyland open in California in a more meaningful way, which, let's face it, they're far from doing right now, then they may be okay. Maybe they'll get their cash cows back up and running, since, again, Hong Kong, as far as I know, is still closed, with it looks like the Disney in France opening up here a little bit later in the next month or so. I think that was announced yesterday. They actually may be able to weather what I'm expecting to be theatrical bombs here. They have at least 2 of them, and they're obviously not getting a couple of films into China for a wide release, which is going to hurt their bottom line as well. And they may be able to actually restore interest in some of their television products, but hey, right now they're looking at cost cutting in foreign TV markets while pushing harder to get those folks to look at those same offerings on their streaming platforms, such as Hotstar, etc., etc. Now, that's an awful lot of mays and maybes and stuff like that. And because I want to be optimistic here, right? I do. I have a few Florida visits planned in the future, which will probably include a lot of Universal. And I would love to see unfettered access to every Florida tourist spot. Not obviously just Disney, but, everybody else. But I have to take the rose-colored glasses off from time to time, and so I will take them off here and say this. I don't expect a huge turnaround in the next quarter. I just don't, and obviously neither does Wall Street. As we're talking, we're down 2.75%. Again, as I said, investors don't agree. I anticipate continued losses in most segments of the business that they operate, and at least for the short term, and maybe into the midterm, if I'm going to agree with the analysts that are talking about this actively now. They seem to think that long term, Disney will be flat. Midterm, it'll drop. Short term, it'll drop, and I don't disagree. But rest assured, I'll keep my eye on all of this stuff as I always do, and you can count on that, because believe me, I have some opinions. But then we come to the part of the video where I say, what do you think? Do you think that the slowdown in subscriber gains are indicating a pattern for the future? Probably. And do you think that the ARPU will pick up in the next quarter? Maybe. Finally, I should say this one. Do you think Disney is overvalued? I do. So, anyway, leave your comments in the section below where it says comments. I would appreciate that. Be sure to hit the like button, of course, and to, share this out. That would be fantastic. But most importantly, check out other independent creators on the platform, because they certainly can use your support. I appreciate it, of course, but they really need it. And follow 2 or 3 of your favorite creators at least. Pick them out. Make sure you check them out. Hit that like button. Hit that subscribe button. Turn on notifications so you get their content. And just give them all the support that you possibly can, because most of them truly deserve it. Aside from that, I'll end the video as I always do. I'll say, be sure to take care of yourself. Take care of others. Wash your hands, of course, because it's good hygiene. It really is. And until next time, bye.
Thanks for visiting today. Be sure you're subscribed and hit that for alerts.
Yay!
Of course, like and share all of the videos that you can, as it helps with the algorithm. Have a great day.